Hello traders, this week we are going to talk about how I trade the Fibonacci retracement. Now before I do anything traders, I'll show you the process I walk through from just a clean naked chart. But before I do anything, you need to understand traders that trading based upon a Fibonacci retracement level is not a standalone strategy by itself. That is something that you should never do. Fibonacci retracements traders are an addition, if you will, to add more weight to your trading decisions. So that would be a price action signal formed at a horizontal event area, and then if that happened to coincide with a Fibonacci retracement, then that gives you another confluent factor to warrant entering the market. So I want to make that clear right from the get-go, and I speak about this in the attached PDF. So I want to reiterate this point. Trading the Fibonacci retracement is not a strategy by itself. It's part of an overall strategy, of course, which is trend, level, and signal. Those three things have to be in play. And then if your price action signal happens to form at a Fibonacci retracement level, then of course you have another compelling factor again to enter the market. Now for me traders, you know, I am biased around the 50% Fibonacci retracement level. So this PDF and this short video is going to be based around the 50% level. I'm not anti any other Fibonacci levels at all. I know a lot of traders trade the 61.8 level, and I make mention about that in the PDF, and that's fine. This is something that you need to determine for yourself. Me, however, I'm only focused on around the 50% Fibonacci retracement because the market loves retracing to the 50% area, and it reacts more favorably at a 50% retracement area than it does any other Fibonacci retracement level. So traders, I'll just show you the process that I go through. Here we have the current Euro USD on the daily time frame and naked chart. So the very first thing I do, traders, is I go about identifying my support and resistance areas. So we'll just do that now. So traders, as you can see, I've identified 1, 2, 3, 4, 5, 6, 7, 8 support and resistance areas. Now understand traders, no two traders look at the charts the same way. So where I identify horizontal support and resistance will be different probably to where you identify them. That's fine. And you can see I did this relatively quick, traders. We have support down here, that's obvious, swing low support around the 106,368 level. We have previous resistance through here, turn support through this area here around 112,280. We have swing point resistance here, turn support through breaking out of this swing point resistance at 114,945. We have multiple touch point supports here, traders. I like this area, 116,154. You can see here we have multiple touch points here around 119,625, now acting as support. And of course we have overhead resistance at 123,432. So that's the very first thing that I do, traders, is just identify the relevant support and resistance areas. I would probably give this a little bit more time in identifying them, but for sake of this example, that's about as quick as it takes me now. You only want to identify the key event areas. You don't want every other minor part of the chart with lines all over the place, just the key swing points or multiple touch points on your charts. When it comes to the Fibonacci, this is what I do. If you're going to trade the higher time frames, the very first thing you do is you zoom out and you take the major low down here to the major high in the case of an uptrend. That's the very first thing you do. Because we predominantly trade the daily time frame, you want to zoom out, have a macro view, and apply your Fibonacci tool to the macro swing low and swing high. Now you can see here, traders, I only have one level marked on my charts, and that is the 50% Fibonacci retracement, because once again, that is the key area that I'm only interested in as far as Fibonacci retracements are concerned. So when you apply your Fibonacci from the swing low to the swing high, traders, you would mark this area on your charts, this 50% area here. You would simply draw a horizontal line at this Fibonacci 50% retracement level, around about there, and you would mark this on your charts as a 50% Fibonacci retracement level. That's the very first thing you need to be doing. And you could even mark from the swing low at 106,368 to the swing high 123,432 if you wish. That's fine. And then you see, did this 50% Fibonacci retracement level form at any other key event horizontal level on the chart? And you can see that it formed at this very obvious pivot swing high here. So this is a key area on your charts, on your USD charts, that you want to identify as a key event area, let alone the fact that it was a key previous swing point resistance. It's also a key 50% Fibonacci retracement. So you would write that on your charts, traders. You would have this area clearly identified anyway, but you could also write in there, just to repeat myself, a 50% Fibonacci retracement level. That is, you do that just in case, in the likelihood, of course, that price retraces back down to, at some point, this level, because you don't know if that happens or not. But if it does, you've got your charts clearly identified at a 50% retracement level in conjunction with a major swing point on your charts. And should you find a price action buy signal here at this level, then you know price has done what it always does. It retraces back down to a 50% retracement of the Fibonacci in line with a previous key horizontal event area, and you have the potential of another 850 pip move back up to the most recent high. So that's how I go about identifying the 50% retracement levels on my charts, traders. The other thing you can do, of course, continue to apply your Fibonacci within the major low and high, because obviously there's lots of swing highs and swing lows within any well-formed trend. So you can also go ahead and apply your Fibonacci tool to the swing highs and swing lows within the major swing highs and swing lows. So I'll just zoom out, traders, and show you what I'm talking about here. If you were to apply your Fibonacci, traders, to, as an example, this swing low here, previous support area, that the very first thing you did was identify this as being a support event area on your charts. I'll just get rid of the previous Fibonacci. If you would apply your Fibonacci, traders, from the previous swing low to the most recent swing high up here, you will see that price has come back down to around about the 50% Fibonacci retracement. Now I say around about, traders, because remember, these are areas. These need to be thought of as the same as support and resistance. They are areas. For me, somewhere between the 45 and 55 area is good enough to represent a 50% retracement. So we can clearly see now on the current Euro USD daily time frame that price has retraced from a significant event area, in this case multiple touch point supports. You would apply Fibonacci from the low to the high, and price has bounced off the 50% Fibonacci retracement level and bounced off a previous resistance area that you identified on your charts in the first instance. So what do you think we want to do? We are looking to go long. In this example, we'd be looking to go long on the Euro USD because we know that price has been bouncing off the 50% Fibonacci retracement and bouncing off a previous, in this case, resistance level turned support. So now it's just a matter of waiting for a price action signal to either form somewhere around this 50% Fibonacci area or form within another horizontal event area as price continues to move on. So traders, I'm not going to spend too much time on this, but that is how you go about identifying your Fibonacci retracements. Now again, I only use the 50%. You can use the 61.8 or 38.2, whatever floats your boat. I don't, because the 50% proves more often than not to be a more reliable retracement area. So just to recap, go back and always apply your Fibonacci to the long-term trend, guys. Remember, if you're trading on the higher time frames, you find the relevant swing low in case of an uptrend and the relevant swing high, and you apply your Fibonacci tool in the first instance. And then you mark on your chart the 50% retracement level of that Fibonacci, regardless if you have a price action signal form at an event area, regardless whether you have, in this case, swing high resistance, you would mark that anyway because it's a relevant area on your charts. And then you would continue to do that with each major step up that price creates in the case of an uptrend, and you would mark them on your chart. So here's a significant area here, as I said before, here, and as you know, price has retraced to the 50%. You wouldn't do it from here to here because that's not a major move. That's just the normal fluctuation of the markets. So you're looking for the major swing points. Swing point here in the form of support, major swing point here in the form of resistance. Apply your Fibonacci and mark this area on your charts. This 50% area here, draw a line on your charts, and if it happens to coincide with previous resistance and the fact of an uptrend, then you know your charts are drawn, ready to go, waiting for price to come back down to you, potentially create a price action buy signal to enter the market, and then you know where your obvious take profit target is. So you have the four compelling factors. You have the trend, you have the level, previous resistance, you have the signal, let's say in this case it was a bullish pin bar, and you have a 50% retrace of the Fibonacci between the relevant low and the relevant high. That's as good as it gets. So anyway, traders, I hope that made sense to you. The PDF says it all anyway, but what I want to drill into your brain is, because we are long-term traders, because we trade the higher time frames, on the first instant on a naked chart, you draw your support and resistance areas on your chart, and then you zoom out and you apply your Fibonacci to the relevant, the most obvious swing low and swing high of the major movement all through here. That's the very first thing you do, and you mark where the 50% Fibonacci retracement was on your charts. Clearly identify it, so you don't have to go back there again. You don't have to guess where it was. It's there. You've written it in text that this is a 50% Fibonacci retracement of the swing low, and you would write the price of the swing low to the swing high, and traders, that's all you need to do. Then as price progresses, whilst you're waiting potentially for a pullback to this area and capture the whale move back up, whilst you're waiting for that to happen, you continue the process again through the relevant swing lows to the relevant swing highs. Not the minor stuff, none of this. Okay, nothing here, nothing there, nothing. Just the relevant swing lows, obvious swing lows, swing highs. And then again, mark this area on your charts that happens to coincide with a previous event area, resistance. Should come back down here and you get a price action buy signal. We don't have one here, but should you get a reverse pin bar down here, traders, bullish pin bar, you know you have enough compelling factors to warrant entering the market, and you take your money out at the obvious swing high. So anyway, traders, all that's covered in the PDF. I just wanted to share this with you because a lot of people get confused. Where do I start? Where do I end my Fibonacci retracement? You start it at the obvious swing low and you finish it at the obvious swing high, and then you simply mark the 50% level on your charts, and you continue that through the obvious swing highs and swing lows within the major trend, and wait for a pullback back into this 50% Fibonacci retracement area, as long as it coincides with a previous event area, either support or resistance. Horizontal areas are king, traders. Then you know you have a very, very high probability setup on your hands. Thanks, traders. Enjoy the PDF.